Hey there, everyone. Dave Keller here with StockCharts.com. Welcome to this special edition of the Final Bar. We're coming to you from a cloudy Redmond, Washington, but hopefully the clouds will dissipate in terms of your understanding of the markets as we have a conversation with one of the legendary traders, Larry Williams. Larry has been a longtime friend to Stock Charts and to Stock Charts TV. He's been appearing on specials. He was part of our ChartCon event that we've done previously. And it is such a pleasure, Larry, to welcome you to the show today. How have you been? How are things? Okay?
Well, David, thanks for having me. It's always, I don't know why people are having on a show at my age, but it feels great to be here. Yeah, everything is fine. I'm still actively trading, and we have really good weather today here in the beautiful U.S. Virgin Islands. But the best thing about the Virgin Islands is the weather. But yeah, things are, the neat thing about what we do, I think, is it keeps you intellectually active. Yeah. And it's just amazing. There's always something to learn, a challenge in the market, your position, you did something right or wrong. This is the ultimate elixir of longevity, I think, is following the markets.
I think you're right. You are the evidence of that truth, Larry, absolutely. And what a great activity that we get to always be learning. The fact that you, with the experience that you've had in 2023, can look back and talk about experiences you've had and lessons you've learned and allow others to benefit from that. We can't thank you enough, Larry. It's really a pleasure. Here we're recording this sort of go ahead.
Well, one thing that has really helped me in my trading, and it's hard to do, but I have found, especially this year, I've learned a lot more from my losing trades. I really meticulously go over my losing trades. What did I do wrong? That's usually I got in too early, by the way. It seems to be the common denominator. I'm too greedy, I guess. But I really, really have meticulously gone over losing trades. Why did I do this? What was I thinking? And it's such a helpful exercise. Losses are very instructive.
I know we're, Larry, going to look at sort of 2023 and how it's played out. You published an outlook at the end of the previous year that really followed the trend pretty well. But just to start off, as you look back, you mentioned lessons learned. What are some of the takeaways you've had over the last 12 months? What surprised you? Where do you feel like it was the more challenging periods? What are your takeaways from a year like this?
Well, every day was challenging, frankly.
It's true.
But the real big takeaway that I learned this year, it's something I used to years ago. There was a newspaper called the National Enquirer, and I keep out all the prophecies of the National Enquirer. Frank Sinatra was going to die, 23 years in a row. He didn't die, then he did die. There are always like funny things to keep at the end of the year. Well, this year, I didn't use the National Enquirer, but I used the internet. All the people that prophesied the markets were going to crash, interest rates were going to go to 20%, inflation was going to go to 30%. And there are so many, I'm going to call them just absolute financial bozos out there that are trying to scare people out of the market. And there was a plethora of them this year. I mean, Rich Dad, Poor Dad, the guy at Morgan Stanley, the guys at Goldman Sachs, Lee Cooper, it was incredible. And people obviously love to get this bad news stuff because they fell for it. And I start to see the same thing now is creeping back into the media. All the purveyors of pests are out there. I fear sells, but fear blocked us from doing things because like, oh my gosh, these guys said this. What am I going to do? It blocks us. It stops us from doing something. And it's like, it's incredible how many bears are out there, or maybe how much attention the media pays to him. Jimmy Rogers, he's bearish. When I first met Jimmy, I don't know, 30 years ago, he's bearish, then he's still bearish. I'm like, no, people get it. And so that to me is a huge message to get across to people. Like, be really careful about bullish or bearish news, but especially bearish news, because these people are just, well, there's a national TV station who I've had some work with, and they have done a whole bunch of bears in the last 3 weeks. And I said, hey, I want equal time. I never heard back from them. You need a bullish news. Not on.
If it bleeds, it leads, Larry. You know that, right, by this point?
Oh, absolutely. That's what I learned. Yeah, first lesson in journalism school. I learned at University of Oregon School of Journalism. If it bleeds, it leads. And we always report about houses that burned, not the 2,000 houses that didn't burn today. Yep. So just be really careful of getting sucked into the bearish trap. We will have bear markets. One's coming. But in terms of overall, just protect yourself from that, the purveyors of pessimism.
I think it's a really good point, Larry. And I think a lot of people were just surprised in 2023 just how resilient this market has been. I have your chart up looking at the cycle that you sort of projected. This is something you published about a year ago at the end of December. 2023 has followed that sort of natural cycle pretty well. When you look at the trajectory, tell us about what occurred over the course of 2023 and how things played out in your experience.
Well, I thought the market would be a little bit stronger than it was. The blue line is a cycle forecast we did in 2022. And the market pretty much, as you can see, followed the blue line this year. It wasn't perfect. The blue line got a little bullish in September, so did I. But October, we made a lower low at the end of the month, so it was a perfect no. But was it able to give us this really strong year-end rally? Oh, yeah, it really did, didn't it? And did it get the rally that started in June of this year? Yeah, it got that. It got the dip of the first year. And the important thing to me is not, yeah, we did a really good job this year. The important thing is people say you can't see the future. And I think you can. And here's evidence of it. This is something created from an absolute mathematical formula years ago. I've been using this for many years. And you can't get a perfect view of the future, but you get a pretty good idea of the general roadmap market or an individual stock or commodity is going to take. So that gives you perspective. And they say in the land of the blind, the one-eyed man is king, right? In the stock market, everybody's blind, like, well, up, down, news, what am I going to do? Well, if you have a general roadmap of where we're going for the year, you can be a better investor or trader because you understand, oh yeah, we're in a down phase now. This is what usually happens in the cycle. On the StockCharts.com, you can look at my seasonal pattern there. That's also a good indication of generally what happens. So we can get a view of the future. That to me is just great news.
When you're, you don't have to tell us all the details, of course, all the secret sauce, but this cycle, how is it, I mean, high level, what are you using to sort of project this cycle? Is it a composite of different cycles that are occurring and just sort of laying an ideal path? Or how would you describe sort of how this is created a year ahead of time? Sure.
It's a little complex, but so I went back and looked at how 2022 traded. And then find all the other years that traded similar to 2022. So going back to the 1800s, back to 1850. And there are other years that had a very similar pattern to 2022. Okay, well then what happened the year following that pattern? You have to then look at all those years, pull the cycles out of those years, and then put them into what you see in front of us.
Really interesting. It strikes me with your cycle projection. Obviously, October, November, December projected to be pretty strong. Certainly, most of the fourth quarter has been very, very strong coming out of the October low. Can you just mention how do you relate sort of a cycle like this versus the evidence you're seeing in the markets around you, right? How closely do you attempt to follow a cycle projection? How do you think about a cycle high or low relative to the evidence you're seeing around? How do you weight those sort of, and particularly if they disagree at times?
Well, you're not going to be perfect in this business. You're going to make errors, you're going to get early or late. But basically starting in October, or very early in September, I did a little buying, but then in October, I just bought. I mean, obviously we're in a big, strong bull market. So what do you do in bull markets? You buy pullbacks, period. You buy seasonal low spots, period, because you're in a bull market. So I've been long, most of the entire year because of the perception that we're going to be in a bull market. And at times you get challenged with position. But if you have that perception of where you're going, you can get there. But if you have no idea where the market's going, you're confused every single day. So it's all about perception. You need perseverance in the market. But if you don't have perception of where you're going, you can't persevere. You can't sit through pain. So basically, I just, I look for trend line breaks in the market. Obviously, we got some nice trend line breaks there in November. We got that big flush out, no low immediately came back. It was a very bullish occurrence, and certainly you've talked about those before. So yeah, that's the market is going to do what it's going to do. We're going to get winter whether we want it or not. The market's going to have rallies and declines whether we want it or not. I never know exactly what we want. Get a pretty good idea of when winter's going to come.
It's really well illustrated. I appreciate you so much talking about that. So we obviously have a lot of strength now in mid-December. It certainly feels like the market is in an optimistic state. Let's talk about the year to come. Now we're going to an election year. Talk about what the cycle forecast looks like for 2024 and sort of how you are anticipating what your positioning is looking like going into the new year.
Well, this is a different cycle than one we just looked at. Here, all I did was take all the years when a president was running for office, a second time in office, for a second term from 1956 forward. And on balance, that's how prices have traded. Now, we haven't always followed the presidential pattern. It's a general guideline. I'm still working on doing my 2024 forecast report. I've been very deep in that. I'm tired of looking at charts. I've looked at so many charts here, trying to figure it out. But I think we're going to see some weakness at the first of the year, and we are in a bull market. We're going to continue being in a bull market, especially right after the election in November. Typically, right after an election, it doesn't matter what dirty dog we elect, we have a strong market rally for at least a few days coming into and after the election. And people are just tired of politics, like, it's behind us. We have a new leader, let's go with it. And markets get really strong, as you can see around the November time period of the chart. So that would be a real highlight for people to watch at that. There'll be other points in the year. I haven't done my final forecast yet, but I think on balance, you got to watch out for those purveyors of pessimism again.
I was taught the most bullish thing the market can do is go up. And I feel like we've seen so many examples of that. If you're short the market, that can work in a limited time frame, but over time, the market has tended to go higher. Well, your last chart, if we could get to that, then I have a number of questions I'd love to get to, Larry, with the time that we have with you. You had mentioned before we started just about some of the cycles in economic data. We're looking at industrial production here. What does that tell you about conditions going forward here?
Well, as for the last 2 years, I thought that we would see inflation abate, and that's happened. That we would see stocks go higher and unemployment go lower. And those things have happened because we're in a really strong economy. If we look at industrial production, that's the black line on this chart, I then find the cycle of industrial production. And we can forecast out in advance then what industrial production is going to be. So the red line is a forecast that was known prior to the industrial production line happening. Well, what we see now, the cycle of industrial production is up. So if production increases, stocks are going to increase. We look at the relationship of that cycle in the past. At those cycle lows, we've seen stocks have substantial rallies at cycle low in industrial production. So there are really real fundamental reasons. Money supply right now, debt level right now, interest rates right now, unemployment levels right now. Basics of the fundamentals that I think drive the market continue to be bullish.
This is really interesting, and I love this sort of longer-term cycle. I feel like we tend to get so caught in the short-term movements layer. This is a really good sort of larger thought about market regimes. We have the Fed meeting coming up here in this week, and we've just sort of experienced the last Fed meeting of the year. When you are looking forward to the next 12 months, interest rates have been certainly an area that so many investors have been thinking about. What the Fed has done in raising rates, and now we're sort of seeing Fed lowering rates most likely in the year to come. You've had experience with different rate cycles in many times. What would you tell investors to think about as we go into a new year where instead of the Fed raising rates, it's more about lowering rates over time? What does that mean for you trying to approach the markets here?
Well, I would think of John Denver's song, and I think the words were blow up your TV, eat a lot of peaches. You got to find Jesus on your own. Don't pay attention to the Fed. Look at the blue line. The blue line told us what the market's going to do. So why get trapped into all the little, look, we had a new report this week. What happened? The market went way down, came way back up. So the market, I think, is on a path of destiny. And we get sidetracked from the path of destiny by all the new stuff that comes out. Will rates go higher? I don't know, but I know what stocks are going to do. So yeah, we'll probably see a reduction in rates, but Powell, he's a skinflint son of a gun. I don't like the guy, right? But he's not going to just give us everything we want all at once. He's going to dole it out a little bit at a time. It doesn't matter. The market is on a path of destiny. It's going to go where it's going to go.
Well said. I love that, Larry. I love that very much. Can we talk a little bit about the commodity space? That's, I know, where you've had a lot of experiences with different areas of the market, not just in equities, but in other areas. Gold has been threatening new all-time highs. It's pulled back quite a bit. Crude oil obviously has been in a pretty steady decline. When you look at some of those markets, the commodity space, particularly gold and oil, what are you sort of seeing going forward here? Signs for optimism or not as much?
Well, let me answer. Let's get back to that chart right there for just a moment. Because I think what investors have to be really careful of is the 2025 time period. Notice that that's when industrial production starts to peak out again. Typically, industrial production peaks out about 10 months before stocks do. I think, I'll go on record publicly here, late 2025, the first part of 2026, a bear market begins. And that, to me, is the danger point coming. I said, I'm not a professional bull. I think we've got problems coming at the end of 2024, the middle of 2025. That's when those purveyors of pessimism will be right. So that to me is like, that's a real danger zone. A little early to predict it yet. I'm not ready to do that, but and I think that we could then go into a sideways market like we did from 1965 to 1982, just year after year, up, down, up, down. No, we may be in the last runaway bull market in 2024.
Interesting, and that's actually a really good point here. And being pessimistic way too early is not a fun place to be if you've been there, Larry, right? I mean, fighting an uptrend is brutal. So let's both try to avoid that and follow the evidence. Really well said, and thanks for highlighting that cycle, Larry. Just to finish off, we only have a couple minutes. I'd love to talk about commodities briefly, if we could. When you're looking at gold, crude oil, gold, of course, is coming off of all-time highs. Crude oil has been in a pretty good decline. Energy stocks are struggling. When you're looking at gold, crude oil, the commodity space, what are you thinking going into the next year?
I think we'll see gold rally later in the year. The big thing for gold people that always get confused about, they think we have a recession, we have a bear market, gold will rally. In fact, it doesn't. They thought it would have high inflation, which we did. Gold rally, it didn't. Gold is a commercial commodity that's used by users and producers, and you need to trade it that way. Don't listen to the talk show radio guys about gold is going to protect you from inflation. It didn't. It's not going to protect you from a stock market crash. So I like to trade it with a commitment trader report. The commercials buy gold at the right time. So it's a tradable market. It's not something's going to protect you from the government or from whatever. It's like wheat, corn, soybean. People use gold. People consume gold. People produce gold. It is a commodity.
Along those lines, what about crude oil, which has been in a pretty good decline now? Energy, probably the worst performing sector here recently. Do you see any signs to be optimistic about crude oil? Is it sort of a void until the chart starts to improve in some way? How do you approach it here?
Let me flip a coin and see here. I think we're going to see a rally in crude, but not yet. We should start around the first of the year, maybe the 10th, 12th of January, something like that. Typically, this market does look at StockCharts.com, seasonal tendencies. Typically, we start to see the energy markets rally around the first of the year. So if the markets start to hold in here and then break out to the upside on a short-term basis, I'd expect that typical seasonal rally to begin.
Just to finish up, Larry, I know you have a premium service on Stock Charts now called Focus on Stocks. It's been really cool to see how you've been approaching this space and some of the names that you've been highlighting. In 2023, it's been dominated in a lot of ways by these mega cap names, the Magnificent Seven, but in November and December, a lot of other stocks really starting to rally. Things like financials, industrials, so many others seeing nice pushes to the upside. When you're looking at the stock level, any groups or themes that you're finding really resonate with you here? Or is it more of a kind of everything's working because we're in a bull market? How do you think of it here?
Well, I think there's some truth. A lot of things have rallied, like almost all of our recommendations made money, especially CrowdStrike, the other stock, Costco recommend 100 and some points lower. So yeah, some really big rallies here, but I think that's about over. The rising tide has lifted all boats here. I think that we may be seeing a bubble in the AI community and stocks, that's been overdone. And my advice has been, look, we've got some great long positions, going to ride them until the first part of the year, and then we want to take profits and get out. So I think we're probably closer to some type of a pullback in the market, and that there's a lot of optimism here. It's great. It's going to drive price a little higher. But I like to sell into strength. And we've seen strength. I would be really careful of the AI thing. I think it's been overhyped. there'll be a point to buy it on a pullback. I think we can figure what out that's going to be. But in terms of right here, right now, you're probably buying a little late in the game.
It's amazing to see how overbought so many names have become. I feel like investors are going to need a lot of help sort of making sense of things into the new year. Larry, it has been such a pleasure to talk to you today. I really appreciate you sharing some wisdom with all of us. I'd encourage people to check out Focus on Stocks and the other programming that you've done. I know you have your market outlook coming out pretty soon, right, for the next year?
Yeah, well, if people go to our website, ireallytrade.com, and when we release the forecast, we'll let them know.
ireallytrade.com is the website. Larry, happy holidays to you and Louise. All the best.
Thank
Stay
you.
safe, and we'll talk to you again in the new year, I hope.
The same thing to everybody at StockCharts.com.
So there you go. There's our conversation with Larry Williams. Again, what a pleasure to sit down with a legendary trader, prolific author, someone who's had so many experiences over decades of trading the markets. His website, ireallytrade.com. It's true. He really walks the walk on top of talking the talk. He really goes through and follows his trades. Those projections about what happened in 2023 and thinking about the reality of the market versus what the expectations were, a really brilliant exercise. And I loved his focus on price action. When I asked about the Fed, when I asked about different things, his general response is that stuff doesn't matter as much as price. And what a great sort of advocate for charting and technical analysis. I would wholeheartedly agree. Good to understand and be aware of those things and not be caught off guard. But if you're going to look at one thing and one thing only, make sure it's a chart. Follow the evidence that the market is providing back to you. So thanks again to Larry Williams. Just so you know, today on Friday is the beginning of our Stock Charts holiday special. We have a very special offer for you here at year end. And if you've never been a paid member, now is a really good time to do it. If you are a current paid member of StockCharts.com, it is a perfect time to extend your membership going forward. We're going to show you a quick promo that does include a QR code that you're going to want to scan to make sure you get the best deal here at year end. Here's the StockCharts.com holiday special. There we go. That's our special edition of the Final Bar today. Thanks again to Larry Williams joining us remotely, sharing some great timeless investment wisdom and some actionable ideas as well. We are super excited to be back with you live at the beginning of next year. And through the rest of December, we have some fantastic special events and special programming to share with you. Coming up, we'll be sharing the top 5 charts of 2023. We'll be going through our 2024 market outlook. I'll be sitting down with some really knowledgeable experts in technical analysis, each sharing their projections of what may come and how investors should think about it. We're going to be doing an all mailbag episode, answering some of the great questions we've received from many of you here in recent weeks. So a lot of great programming to come here, and we look forward to being with you again in the next year. And until then, happy holidays, be well, stay safe. We'll talk to you again soon. Bye now.